All right. Welcome to my first time home buyer seminar. I'm just going to get right into it here. So let's see. Here it is. All right. So this is it, your ultimate first time or your ultimate guide to buying your first home. This is an available download on my website as well. So if you want a free copy of this, literally just go to my website, www.hatchmanloans.com, and there is a link for a free first-time homebuyer guide. That is this guide right here. But I'm going to walk you through it, definitely open-ended. So any questions you might have about any of this, just drop it in the chat or in the Q&A section. But here we go. This is let's get right into this bad boy. So first of all, who am I? Why should you care about me and me teaching you this stuff? So anyway, my name is Braden Hatch, aka the Hatch Man. Anything social media wise, you will see me as Hatchman Loans. I've got a YouTube channel, Instagram, Facebook, LinkedIn, TikTok. I mean, you name it, I've probably got it. So, you want to communicate with me. I have a lot of educational videos about this type of stuff and then deeper topics, right? So specifically around down payment assistance, investor products, there's lots of different ways we can go. There's so much in the world of mortgage, but I tried to break this one down specifically for first-time home buyers. So that's the majority of what we're going to talk about today. I am a licensed mortgage broker. I serve Arizona, California, Texas, Virginia. I actually just hired another team member who has a lot more states. So I've got a handful of other states. So if you don't see your state listed here, just send me a message, shoot me an email asking me about that state, and I can probably help. And if not, I can point you to the right person. So again, I'm typically helping first-time home buyers. I have been in mortgage for, let's see, over 10 years now. It's easy to keep track of because I got into it 2 weeks before my daughter was born. So, wife was super pumped about me quitting my salaried manager job to go into a commission-only mortgage gig. But you know what? It's worked out for the best. So it's all good. But anyway, that's who I help. I help first-time home buyers, any spectrum of individual, mostly myth busting, right? Those people that think they don't have good enough credit, maybe not enough money. I show them that there is almost always a way as long as you know the rules. So let's keep it going. Here's just a few examples of some real client. These are called closing disclosures. So yeah, if you haven't bought a house before, it's probably why you're in this class. It is a first-time home buyer seminar. But a lot of people think you need tons and tons of money. So I just wanted to share a few examples of actual client closing disclosures of mine. As you can see here, even though closing costs are somewhere in the realm of $17,000, $19,000, $18,000, the total money that my clients have to actually bring, or that they're actually bringing to the table in some cases, is zero or $1,200 or less than $500 or negative $800. So let me explain a little bit of that real fast. So the negative numbers is when you actually get money back at closing. So you're probably asking, holy shit, how can I get paid to buy a house? It's not actually what's happening here. So what's happening is in most cases, when you're buying a house, you have to put down an earnest money deposit. So let's say, this example right here is perfect. That, $17,107, but their cash close was 806. So if I remember that transaction correctly, they had to put $1,000 in earnest money deposit when they first went under contract. So it's kind of like, when you're renting a house, you typically have to put in, what is it, first month's, last month's rent, a security deposit. So the security deposit is the best way to think of it, right? Like you put that down in the beginning and then you get it back as long as nothing happened with the apartment or wherever you're renting, right? So an earnest money deposit's kind of that same thing. You're going to put that $1,000 down and then that total amount will go towards the amount needed at closing. So in this case, again, they actually got 800 of that $1,000 back because of how we negotiated it, because we had the seller contributing closing credits and we had down payment assistance. Basically, what had happened is they had paid for their appraisal ahead of time out of pocket. And so we refunded that back to them at closing so they could get it back. And again, with the extra credits that we had, that's how they got some of their earnest money back. So again, it was a little less than $200 total for this particular client is what it took to actually buy a house. Pretty cool, right? You don't need a ton of money. So again, I've got lots of examples. And I'd say most people on average are closing with, $3,000 or less total money out of pocket. So if that's in your budget, if you've got about 3 grand or maybe even less, I probably have a home loan solution for you. So So let's just get right into the process, right? There's basically 8 overall steps that it takes to buy a house. So we'll just get right into it here. First one is the credit score. That one is, most people is that's what holds them back. They think their credit is not good enough. If you don't know what your credit is, most apps these days, banking apps, credit card apps, they usually have something like that that will show you what your score is. You can also get a full copy of your entire credit report up to once a year from annualcreditreport.com. I posted the website link up here for you. Well, it's not really a link. You're going to have to type it in, but www.annualcreditreport.com. You can get your entire credit report completely free up to once a year. Why is it good to have that ready? Well, one, you want to see if there's any errors on there, any problems. It's good to kind of get ahead of that and, instead of having the loan officer pull it or the mortgage company and then being like, hey, what is this? You can kind of get in front of it. So this is a good way to kind of figure out what you need. Minimum credit score requirements. In most cases, I mean, again, it just depends on what you're looking for. So, I've got loan programs out there that will do credit scores down to, 520 for FHA. You're gonna have to put in a little bit, more of a down payment for something like that. But veterans, my VA loan out there, that thing minimum credit score is only 520, and that's with no down payment. Now, is it going to be tougher to get qualified at that score? For sure, but it's not an automatic knockout. So if your score is too low or you're worried that it's too low, just know that's not an automatic deal killer, unless you're trying to qualify for a specific program. So, for example, most down payment assistance programs, the ones that we talked about in the previous slide, those ones typically need a 600, 620. More options open up at 640, 660. So kind of that mid 600 is the goal that you're shooting for if you're low on money. If you don't have a ton of funds to put down for the down payment, for closing costs, etc., kind of the mid 600 is what you're going to be shooting for. All right. Get pre-pro for loan. That's what I do. That's the easy part. If you want to get that going today, super, super easy. Just go to my website, HatchManLoans.com, and that way you can schedule an appointment. I usually, for first-time homebuyers, I typically don't recommend just jumping into the application without having a conversation with me first, or at least one of the loan officers on my team. It's good to kind of talk about what your goals are, right? Because everybody's situation is a little bit different. And I'll be the first one to tell you if it's not realistic, right? Like I've had some people call me and they're like, yeah, you want to get by like maybe a $600,000 house, but I don't really want to spend more than $1,200 per month. I'm like, okay, cool. Are you putting down 450K? Because that's the only way to get your loan payment to that, right? We have to be realistic. Math is math when it comes to monthly payments. I mean, here's an easy one. Like, look at the total sales price right now, 400, whatever price you're looking for. Let's just say $400,000. You know, uh, a mortgage loan is going to be for 30 years. That's 360 payments. So even 400,000 at 0% interest, you divide that by 360, you're looking at 11 a month, right? I mean, that's if we were giving it to you for free, if you were not getting charged interest. We know that there's interest. So obviously the other things you have to factor into that is there's additional monthly payments that go along with that. That's just your principal and interest. You've got taxes, you got insurance. I'm really not trying to talk anybody out of this. I just want to prepare people for realistic expectations because the payment shock is the biggest one that I get with first-time homebuyers. And I get it, right? Like even when I bought my first house when I was 23 years old, 39 now. So yeah, was that 16 years ago? Something like that. Uh, I remember payment shock. I remember seeing that monthly payment and getting a little bit freaked out. But again, my loan officer let me know that it was something I qualified for, that I would be able to handle it. And, I did. I was able to handle it. I sold that house, bought this one. There's a lot of cool things you can do. So just, don't get scared too bad. The other thing with buying a house is it's like the opposite of rent, right? When you go into a rental property, you typically have a nice low, monthly payment, maybe not low, but a manageable monthly payment for your rent, right? And then what happens is, depending on how long you sign the lease for, once it comes up for renewal, 9 times out of 10, what's the situation? Landlord's jacking it up, right? His costs have increased, whatever. Your rent typically increases year after year after year until it finally gets to the point where you just get frustrated and you go find something cheaper, or you get frustrated enough to where you get on one of these and you talk with the loan officer to see what it would take to buy a house. Buying a house is the opposite of that rent, right? Your first year is typically the most expensive that you're going to be paying because that's especially if you have little to no money down, that's you're financing pretty much all of it. So in that case, you're going to start out with a higher monthly payment, and we all hear about interest rates. They're really not that bad, guys. They're about where they need to be. I'm hoping that they'll drop a touch, but I really don't think we're ever going to see that 2 or 3% in our lifetime again. So if that's what you're waiting on, just know you're probably going to be renting forever because I don't think they're going to get back that low. And again, I hope I'm wrong, but the data shows otherwise. So get ready for that and know that refinancing is always an option because what are you doing with your mortgage payment? Every single month it's ticking a little bit away towards the principal balance. It's becoming a smaller loan month after month after month. So if one day that payment's a little bit too tight or interest rates drop, we can refinance and lower that monthly payment. Or if you needed to pull money out to access some of that equity, that's how we can get into, using that to buy exciting things like your first rental property or your kid's college or pay off your credit card debts or, whatever you need to do. That equity is built in for you. And that's one of the main benefits of buying a house. So anyway, the pre-approval process is easy, but you definitely want to have a good conversation with your loan officer and talk about all your goals. How much money do you have to work with? What is a realistic monthly payment that you can handle? What are your long-term plans? Is this house going to be your next house? Is it going to be your house for the next 5 years, 10 years, 1 year? Do you want to eventually turn it into a rental property? Everybody's goals are a little bit different. So make sure you let your loan officer know all of those things before you take that actual application. So here's just a few little, myths here. Again, zero down is not available. That's a myth. There's so many zero down options, either using down payment assistance, rural areas. 20% is not the minimum, not even for investment properties. For an investment property, it's 15% down in most cases. So I don't know where this 20% down came from. I think that's there because that's the one on a conventional loan. If you're putting 20% down, you don't pay mortgage insurance. But again, the math as far as the amount of monthly payment you're going to pay extra on mortgage insurance compared to how long it would take you to save up that 20% is an astronomical difference. So just pay the PMI, get into the house, and let equity work its magic. That's my recommendation there because that's what I did. No options for self-employed. Yeah, that's bullshit. There's so many options for self-employed people. I have bank statement loans out there. If you're worried about, not reporting enough income on your tax returns, we can use your bank statements instead of your tax returns. I mean, there's a lot of really cool things. Again, went into the credit piece already, and look, rates are not too high because you don't care about the interest rate. You care about what you pay monthly. All right, what else? All right, here's where you can kind of figure out. So the only true way to figure out how much you're qualified for is to take an actual loan application. But if you're not ready for that yet, here's a quick, easy step that you can do to get you an idea of how much of a mortgage payment or how much of a mortgage you can qualify for. So here's a quick, easy one, right? Take your total income. If you're a W-2 individual, if you're paid hourly, you should be able to figure out how much money you make, right? Like, come on, I can't tell you everything. You should know how much money you make. So let's just assume, you make like 20 bucks an hour, right? So 20 bucks an hour times 40 hours a week times 52 weeks a year, that works out to be $41,600. Now we're going to divide that by 12. Sorry, your total monthly income. I probably should have put that on there, but I'm telling you now. So total monthly in that scenario is 3466. Now let's say you have no debt whatsoever. In that case, we're just going to times that number by 0.45. That's going to give us 1559.9999. So 1560 essentially is how much of a mortgage payment you would be able to qualify for, assuming you had no debt and made about 20 bucks an hour. So what does 1560 equal in a price? Well, again, that's going to depend on so many other factors. How much money you're putting down, your credit score, all of that good stuff. But again, this will give you a good baseline. That's a real easy calculation. Whatever your total monthly income is, take that, deduct however much money you have in monthly debts. So that's going to be your auto loans, student loans, credit cards, and again, minimum monthly payments on student loans and credit cards. So if it's like 50 bucks a month, just add that to the monthly total. So that's a real quick, easy way to figure out if you're even ready to qualify. If that number is low, if it's less than 2 grand, or if it's, you know, a really, really small amount that's less than your rent, you either need to make more money or have less debt to qualify for more. Cosigners can also help with this piece. If you are tight on how much you can qualify for, a cosigner is somebody that can have additional income on the application so you can qualify for a higher amount. Keep in mind, cosigners all need to credit qualify. If your credit is shit and you make a lot of money, adding a cosigner will not help that. You need to get your credit fixed first. That's kind of how that works. All right. Right real estate agent. I really cannot stress how important this part of it is, along with the lender, making sure you have a smart lender that knows what they're doing, that's going to put you in the loan product that works for you, not the one that they recommend because they don't know about the other ones. But a lot of lenders don't like down payment assistance for whatever reason, but I love it. They're more difficult to work on our end, but you guys get such a good deal that it's totally worth it. So anyway, getting into real estate, you really do not want to just take your coworker's best friend's dad's cousin-in-law because he has a real estate license, right? All real estate agents are not created equal. There are good ones and there are ones that probably should not be doing it, especially when it comes to helping home buyers, because the rules have changed. You may have seen some stuff on social media about buyers commission and real estate commissions and all that stuff. And I'm not here to talk about that because one, I don't care. Two, it's not my job. And yeah, I just don't care. But for real, you need to have the right real estate agent. So there are agents that I work with, especially if you need down payment assistance, a little extra negotiating power. I have ones in pretty much every area where I work throughout the state of Arizona and in other states. So if you need advice, if you want someone to help you when it comes to this after you get pre-qualified, just let me know and I can connect you to the right person. But just a few good ideas is again, never just take someone's word for it because your cousins, friends, brothers, whatever is a licensed real estate agent. Interview them. Ask them questions. They should have up-to-date knowledge on what's happening in the market. They should understand the areas. They should be able to talk freely with you, but while still being professional, and you need to understand their negotiation skills. For this next piece, because that's when you get into the house hunting. The house hunting can be long or short, right? My first house when I was buying it as my primary house, again, very different housing market at the time, but it took me almost a year to find the right house. I think it was 9 months, 9 to 10 months before I finally found the right one. And then it was a new construction, so it took another, I think, 10 months to build. So it was a process. But my first rental property that I ever bought, we searched for homes. We looked at 7 or 8 homes throughout the course of an entire day, starting in the morning, and I bought a house by the end of that day, so less than 24 hours. So like it really just depends. Again, my first rental property, I definitely knew what I was doing compared to my first house. But again, that's the whole point of all of this, so I can help share those things. So here's some quick tips on what you should share with your real estate agent when you're doing the house hunting. Think about the non-negotiables, right? Like it has to have a pool, or it has to have 2 bedrooms, or whatever that looks like. Do you want to be in an HOA, or do you care? Like, look at all of those things. Look at the commute, the drive time. If you're worried about how long it's going to take you to get to work every single morning, if you have to drive, take that drive, before you make an offer on the house. Go from that house to your office to kind of gauge it. But do it during the time frames you would normally be traveling to work. So just, a few little things will help prepare you. Because again, buying a house is a big commitment. In most cases, it's a 30-year commitment that you're doing. Not that you're gonna be there for 30 years, because most people sell or refinance within 3 to 5. But again, it's still a long commitment, and you want to have realistic expectations for your budget, right? That was one of the things with my first house. I could not afford much. So I was either looking at condos or driving really, really far away from where I worked to get a single family home, which is ultimately what I did. I chose to sacrifice location for a bigger home. It worked out okay. But again, these are all things you want to think about. And then don't judge the homes just by the photos, both good and bad, right? So to go back to the story of my first investment property that I bought. We were looking to purchase in the city of Pine Top, Arizona, because I wanted to use it, number one, as a kind of a second vacation home, and then to also rent it out on Airbnb. So I wanted to have that cabin feel. I had a very, I had my non-negotiables, right? My non-negotiable was it had to have a garage, because I wanted to be able to store things there because I'm 3 hours away from Pine Top. And it needed to have that cabin feel. And then at least 3 bedrooms, I think was my other one. So like, because again, for rentability and stuff, that's what I wanted to look at. And so when we were looking at properties, my wife's also a real estate agent, so she had printed me out a bunch of homes to look at, and there was one that was like 20K over my budget, and the pictures were terrible, and I was like, nah, we're not going to see that one. It's trash. So I crossed that one off the list just because of the photos. Well, then we actually went out and looked at the homes, right? We went and searched through every single one. And it was a long day, right? The house hunting process, driving from house to house, and I was just disappointed with all of them. The ones that had the best photos looked the worst. Like I'm not tall. I'm 5'11. And so some of these houses I would walk in and the ceiling was like right there. It was I just felt claustrophobic. They felt like houses, not like cabins, and I was just feeling defeated. And so we went to grab, a bite to eat right before we were about to head home, and I was just feeling all bummed, like, man, like we spent all day doing this. I really wanted to buy one, but it's just none of these work. I don't like any of them. And my wife was like, all right, well, what about this one that you crossed off the list? I was like, I mean, it's 20K over and it looks like shit. And she's like, well, we're here. We might as well go see it. I was like, all right, fine. So we go and look at it. And yeah, long story short, that was the cabin that I bought. It literally checked everything off my list. They just took terrible photos. Like they had a bunch of photos of like the shed and the garage, but like nothing of the house. And it was this beautiful vaulted ceiling log cabin, like, fire, like legit two-sided fireplace on the inside. Like there was no photos of any of that. But this is what I'm telling you, just don't judge a book by its cover. Listen to the advice of your real estate agent. A good one will tell you what to do, but always respect you and do what you want to do at the end of the day. So, my quick little tips for house hunting. I think I talked about this already, transportation, just, try driving during those time frames. I already touched on that. Making the offer, right? So now that you've found a house, this is where you want to have that conversation with the real estate agent. What do they think you should offer? What are the houses going for? What did the house last sell for? Again, they should have all of that research. But here's something I want you to think about, and this will make more sense once we actually have a loan in process. But instead of asking for a price reduction, so let's say a house is, $400,000. Instead of asking for 20K off the sales price and saying, you know what, we'll give you 380 for it. If you're low on funds, concessions, we can get a lot more creative than we can with a lower sales price. Because honestly, every $20,000 difference in loan amount is only about $100 in monthly payments. So you'd have to, so if you're looking to get a much, much lower payment, again, every 20K is about $100. It's not that big of a difference. But using a seller credit, we can use that to buy the interest rate down by 1, 2, sometimes 3%. So that is how you can save six, seven, $800 per month by buying the rate down. So it's just a smarter way to do it, and it's less money out of pocket. That's exactly how, when I showed you those examples of clients bringing in less than, $1,000 to closing, this is how we did it. Because as you saw, the closing costs were still like $17,000, but because we got $20,000 in, credits, we were able to use that to pay all the closing costs and then use the rest to buy the interest rate down. So again, there's just a lot more things we can do when you get seller credits. And again, it takes the right real estate agent to negotiate these things. If your realtor immediately says, oh, I don't know, concessions are too hard or seller credits are too hard to negotiate, find another realtor. All right, this is more real estate stuff, but just home inspections. There's a lot of confusion between the difference between home inspections as well as appraisals. So the inspection is an optional service, but I always recommend it, especially if you're going to buy, like I don't like to say resale house, right? I was going to say used, but a non-brand new house, right? Like someone has been living in it. They have been there. It may have been through a few owners. So you want to get a good inspection that will let it, kind of how the electrical's doing, the plumbing, and any really issues with the home. And this can also be kind of another negotiation tactic, right? So if you're doing the home inspection and everything's kind of old, it looks like it's about to break, but it's not really breaking. This is where instead of asking them to replace it or change it, you can ask for more credits. I actually did this when I bought my investment property, right? Like we negotiated the price down. In that particular scenario, I didn't ask for concessions because I had the money to do it. But when we were in the inspection period, there was a lot of little repairs. And so we're like, instead of doing all of these repairs, just give us a $5,000 closing cost credit. And then I use that to buy my interest rate down to get a lower monthly payment. So again, something kind of cool that you can do. And usually it's like 10 to 15 days. Again, I'm not a real estate agent. Consult with your realtor for the exact time frame because it's a negotiable piece as well in most cases. But anyway, get an inspection. And then yeah, close the sale, move in. That's the easy step, right? Get through the loan, get in your house. That's pretty much it. So here's just kind of the overall process again. Check your credit score, get pre-approved, figure out how much you can spend, find that right real estate agent, go house hunting, make an offer, get the home inspected, and then get your loan done, close the sale, move in. There we go, guys. So let me know if you have any questions. Again, I offer free consultations for not just first-time home buyers, but any type of home buyer. Anything you need. If you've got questions, you can email me. That's my cell phone number. You can check out my website. A lot of really cool resources and tools on there. So again, just thank you so much for joining today. This was a lot of fun. And yeah, if you have any other questions, let me know. And then I do have a special gift for attending this webinar. So thank you. I've already got your emails, but thank you again for attending. My special thank you to you is I'm going to give you $1,000. $1,000 off your closing costs if you choose to get your mortgage loan with me. So be on the lookout for that in your email. If you don't get it for whatever reason, go ahead and send me a message, an email, a text, whatever, and just say, hey, where's my $1,000 closing cost credit? I'll get that emailed over to you and we'll get that applied, once we get your mortgage loan up and running. And let's get you into a house. Thank you guys.